After more than 3 weeks of tight, sideways, choppy price action in the market, Ethereum finally made a technically significant move that enabled it to break out above its downtrend line from the April high and at the same time reclaim support of its 50-day moving average. So in this video, we're going to go ahead and dive in and take a look at how that may affect the market's outlook in the coming days, as well as any altcoins that are setting up on our radar. So let's go ahead and dive in with a look at Ethereum. Ethereum, as I mentioned, it has broken out above a downtrend line from its April 16th highs. So that's about a 6-week downtrend that Ethereum broke out above. And notice how that correlated to a move above the 50-day moving average on the same day. You'll find that often happens, especially at pivotal points where key moving averages, such as the 50-day moving average, align or converge with trend lines. And when you see the convergence of a trend line with a moving average, then that resistance or support level becomes even more significant. Therefore, when you break out above it, it should generate a more powerful rally, or if you fall below it, a more significant sell-off. Now, you'll see what happened. Notice what happened here is that after we pushed above the 50-day moving average and downtrend line, the price action did kind of quiet down, but just traded sideways and consolidated near the highs. So nothing wrong with that. Consolidation near the highs is always bullish unless we're seeing higher volumes selling during the consolidation, which we have not yet seen. So we've got, again, the price action holding above the 50-day moving average here the past few days. Obviously, that 50-day moving average now becomes a key support level right around 1885. We wouldn't want to see the price go back below that, although an undercut, a brief undercut or dip below that would not be that bad, but we wouldn't want to see the price action close the day down below that level, because then we could have a failed breakout. If we do get a dip, though, we've got the rising 10-day moving average currently at 1845, and look for that 10-day moving average to soon cross above the 50-day moving average, which would be a bullish signal. Now, the only thing we don't like about this move that we had in Ethereum over the weekend is it did not occur on very significant volume. Notice how when we have a big technical move that breaks out above a downtrend line and a key moving average, we should see a big volume spike, but notice that volume was just pretty much right on par with the other days. So that could have been in part because it was a holiday weekend, but that also makes us a bit more suspicious of the move, because it only takes one wave of high volume selling to undo the gains of a rally that occurred on average volume. So we are a bit suspicious of this rally's lack of volume, but nonetheless, we're proceeding with caution because on a technical level, we have changed the intermediate term trend. If we do get any further upside follow through in Ethereum in the coming days, keep an eye on the just above the 2000 level around 2018, which is the prior highs from May 5th. Now let's take a look at the chart of Bitcoin, and you'll notice it's quite different than Ethereum. In fact, Ethereum has broken out above its downtrend line and moved back above its 50-day moving average, but Bitcoin remains below its 50-day moving average. In fact, notice that over the past few days, it ran into resistance of its 50-day moving average and pulled back after doing so. And the trend line from the April highs is actually just above the high of the past 3 days. So although Ethereum is looking better, we've got Bitcoin below both its 50-day moving average and downtrend lines. So it is positive on one hand for the altcoin market that Ethereum has reclaimed its 50-day moving average and downtrend line, but without Bitcoin in sync, any rallies are likely to be in check because everything is paired with Bitcoin. So without Bitcoin cooperating, then moves may be limited. But nonetheless, we could see a situation where Bitcoin just moves sideways and we see relative strength continue to increase in the altcoin market. But we always talk about relative strength in the market, and this is a great example of relative strength versus relative weakness. In other words, Ethereum has relative strength to Bitcoin right now because Ethereum is above its 50-day moving average and downtrend line, while Bitcoin is below its 50-day moving average and downtrend line. So this is just a really clear example of what we mean when we're referring to how one crypto has relative strength or relative weakness versus the Bitcoin benchmark. In this case, Ethereum has the relative strength versus Bitcoin. Now, zooming out to the longer term weekly chart, we've been saying over the past 2 weeks that Bitcoin was likely to find support at its 20-week moving average, just as it did back in March. And in March, you see here, we formed a bullish reversal pattern after coming into support of the 20-week moving average, this blue line. And we said in our recent videos that would likely happen again, and that's exactly what happened. We finished last week with a bounce off that 20-week moving average. Now, despite the recent breakout in Ethereum back above its 50-day moving average, we're still not seeing a lot of compelling setups in the altcoin market. Most of the altcoins are bouncing off their lows, but what we're looking for is altcoins with relative strength and showing at least higher lows on their daily charts and ideally back above their 10, 20, and 50-day moving averages. Since there haven't been a lot of plays with relative strength, we've instead been focused on quick bounce plays on trend reversals. And we have 3 positions currently in the portfolio that we're holding, and one of those is SAND, S-A-N-D. We bought SAND back on the 25th as soon as it moved above the high of its 10 and 20-day moving average convergence. What sparked our interest here was we formed a double bottom the day before from the prior lows, and then we saw big volume, this volume surge. So the volume kind of clued us in that there was some accumulation, and we had already established support at the prior lows. So we went ahead and bought at 51.55, and SAND followed through when Ethereum broke out on even bigger volume and pushed above the high of its prior swing high. So now we've got a higher high and a double bottom in place on the daily chart. And just like Ethereum, SAND has been consolidating for the past 3 days near its recent highs. It does have resistance of the 50-day moving average just above, but a breakout above the high of its current consolidation here will put the price back above the 50-day moving average. So we currently have a gain of about 8% on this trade since our entry 5 days ago. Our entry was a little bit early. Rather than waiting for a breakout above the 50-day moving average and buying the pullback, again, this was a bounce play, not a relative strength play. So we looked for an entry on a move above the 10 and 20-day moving average convergence with strong volume and a prior low being established. EDU has been on a relative strength watch list for several weeks, and we've mentioned it in our videos as well. And because of its relative strength, it did break out above its range when Ethereum broke out. Notice the volume came in and we broke out above a multi-week range. However, very negative that the breakout failed. Completely failed, and the price action came all the way back down to the pre-breakout level. And sold off on higher volume. So we don't like that failed breakout. There was definitely selling into strength. So EDU, although it's on our relative strength watch list, we're going to go ahead and remove it from our watch list now because of that failed breakout. These failed breakouts do have a tendency to reverse sharply when they fail. So be sure you keep a close eye on that if you happen to buy the breakout in EDU. Next up is AGIX. AGIX is currently consolidating in a tight range right at its 50-day moving average and poised for potential breakout above its 50-day moving average, which does correlate to a breakout above the prior high. So we've already formed a higher low in the daily chart, and now we can form a second higher high if we break out above this 50-day moving average. We traded AGIX a few weeks ago and made a 14% gain on this first move higher on half of the position. And we've been looking for a reentry since then, but we're looking for a lower risk reentry point because it's been very choppy and indecisive. So what we're looking for right now is a breakout above the 50-day moving average on big volume, and then we'll look to buy the first potential pullback after that breakout, depending on overall market price action. Now, in addition to AGIX, we're keeping an eye on the entire AI sector. AGIX is a leader in the artificial intelligence sector, and there's some other ones such as FET, Ocean, and GRT that also tend to move in sync with one another. But AGIX is one of the leaders. And if we do see strength in the altcoin market, we're likely to see money flowing into the AI sector again. It's been a hot sector this year, and it will continue to do so in the near term. So definitely keeping an eye out for a potential re-entry, I should say, back into AGIX. Next on our radar is QNT. QNT is a former leader in the 2021 bull market with strong fundamentals, but it's been kind of in a steady downtrend, just drifting lower now for months. But over the weekend, it actually broke out above its 50-day moving average, and it's the first time since late February that the price action was trading above the 50-day moving average. Volume also swelled higher, confirming the rally. Now, the volume's a bit distorted here because you had this monstrous volume day back in April. But if you factor that day out, it is the highest volume day we've had in several months on the upside. So QNT is on our radar for a potential trend reversal play, but it's too early right now because notice that we haven't even formed a higher low. This was a rally straight off the lows, and those are dangerous because you can get a pullback. You don't know where it's gonna stop. So for swing trading, we first want to see a pullback before we look to getting QNT. Now, we don't necessarily need to have a correction by price, which is a pullback. We could have a correction by time, which would be a consolidation pattern. So we either want to see a pullback or we want to see some sideways price action, kind of a bull flag pattern here over the next few days before we look to buy QNT. Last week in the chat room, we said that Ocean was a potential buy entry when it moved above its 10 and 20-day moving average, but due to overall market conditions, we passed on an official trade entry. If anyone grabbed that trade, it actually is showing a great profit for you right now, more than 10%. And it's actually powered higher now above the 50-day moving average. Big volume today, on track for monstrous volume today on this breakout. And we're above the 50-day moving average and the high of the 4-day consolidation. We mentioned earlier that AGIX is a leader in the AI sector, and Ocean also is a leader that tends to run when the AI sector runs. So we'll be looking at Ocean for a potential buy entry in the Morpheus crypto portfolio in the coming days, now that it's broken out above its 50-day MA on big volume. We'll be looking for a low-risk pullback entry, and we'll send a trade alert to paid subscribers with our exact entry point and exit point if we spot a low-risk entry. So that's a wrap for today. And if you are new to Morpheus Trading, head on over to our website and learn more about our services. And be sure to hit the like button and subscribe to our channel for more great videos.